Hi everyone, this is BA 99.1 First Long Exam Samplex Discussion. So, to briefly introduce myself, I am Alisa Herwella, who just graduated this July 2020 under the BAA program. So, what I'll be discussing now is I'll first discuss the theory problems, the short problems, and then lastly, the long problems. So let's start. First question. The balance sheet presents an entity. So upon reading the choices, you have four different options. Financial position, or result of operations, or its specific date, or for a specific period. So the balance sheet is a financial position. It describes the company's condition at a specific date. So there's a cutoff date. It's a statement of financial position as of a specific date. So the correct answer is letter A. Okay, let's highlight this. Number 2, the statement of comprehensive income presents an entity. So if the balance sheet is a financial position, the statement of comprehensive income is a result of operations. So it's a profit or loss statement for this time it's for a specific period. So the correct answer is letter D. Okay. Number 3. An accountant erroneously debited rent expense in recording a cash purchase of computer equipment, which happened at the end of the year. So let's visualize this. The company debited rent expense and credited cash. The correct entry should be debit equipment, since this is a capitalizable purchase, and then credit cash. So the correcting entry should be to cancel out the debit expense, to credit rent expense, and then debit equipment to recognize it. So without this correcting entry, our expense is overstated, since you recognize it. It should be the asset. So the asset is understated. So looking at the choices, the correct answer is letter A, understated asset. Number 4, which of the following accounts does not have a normal credit balance? So first, we identify what are the normal balances. For the debit, it is usually assets and expense. On the other hand, normal credit balance or the liabilities and the revenue. So let's go through the choices. First, rent payable. Rent payable is a liability, so that's a normal credit balance. Letter B, prepaid expense. Prepaid expense is an expense you will incur but you paid in advance. So since this is an expense, the normal balance is debit. Letter C, unearned rent revenue, and letter D, rent revenue. Since these are revenue items, the normal balance is credit. So the correct answer is letter D. Number 5, which of the following statements is true? So under accrual accounting, both cash and non-cash transactions are recorded. So this is true. Letter B, under cash basis accounting, only transactions involving cash receipts and cash payments are recorded. So this is also true, since in a cash basis, what we look in a cash basis accounting is the involvement of cash. So every cash receipt and cash disbursement, you record it. Letter C. Cash basis accounting is more simple and provides less information than accrual accounting. This is also true. So the correct answer is letter D. All of the above are true. Next, a restaurant received from a customer 2,000 pesos for a package of 5 meals. After providing 4 meals, what should the restaurant report in its income statement? So let's visualize this. Number 6. So number 6, the customer received payment for advance payment for the 5 meals. So debit cash since naka-receive ng cash si company. Then credit unearned revenue. So cash ng 2,000, earned revenue at the same time, same amount, 2,000. So after providing, it should be 4 meals. After providing 4 meals, so you recognize now the revenue. So you cancel out debit unearned revenue, and then you credit revenue, sales revenue. But how much? So 2,000 divided by 5 meals. Multiply it 4 since you already earned 4 meals. That would be 1,600. So looking into the choices. So what should the restaurant report in its income statement? So it's true that the company has a revenue of 1,600 and an earned revenue of 400. However, we should read the question properly. It asks about income statement. So unearned revenue is shown in the statement of financial position, and you can only see the revenue in the income statement. So the correct answer is letter B. Okay. So number 7, under accrual accounting, a debit to interest payable is usually accompanied by a credit to. So under accrual accounting, you accrue interest payable, and it is usually accompanied by, let's visualize this, accrual of interest expense. So you usually debit interest expense and then credit interest payable since you accrue interest expense. And when you pay it, you cancel out the interest payable. So you debit interest payable and you credit cash since your cash nababawasan siya. So the correct answer would be debit interest expense. Letter C. Next, which type of account is usually credited during the closing process? So when you close, let's visualize this. So when you close, to close revenue items, the normal balance for revenue items, what I've said before, is credit. So to close it, to cancel out it, use debit revenue items. And then you credit income summary. Next, since on the other hand, the expense items usually has a normal debit balance. So you credit expense, and then new debit income summary. So we close these items since they are only temporary accounts. We close it every period. So what is always created during the closing process? So the correct answer is letter D, since its normal balance is debit. So when you close it, it's always credited. Letter D. Number 9, what is the other term for owner's equity? So from what we can recall, owner's equity is assets less liabilities, which can also call net assets. The correct answer is letter C. Number 10, which sequence of actions correctly summarizes the accounting process? So first, what do we usually do in the accounting process? So we first journalize the transaction. So 1 is journalized transaction, A is wrong, so B is right, C is wrong, and D is right. So we're now choosing between letter B and letter D. So after you journalize transactions, you post to accounts. So post it to its respective accounts, and after that you prepare the trial balance. So between B and D, the correct answer is letter D. So number 11, which of the following cannot be accompanied by an increase in cash? So a decrease in equipment, an increase in rent revenue, an increase in accounts receivable, or a decrease in accounts payable. So I've listed here 3 different scenarios in which there would be an increase in cash. So first is the sale of PPE. So since you receive cash in selling your PPE, you debit cash and then credit equipment and accumulate the depreciation for that equipment to the recognized. So the second scenario is that you receive cash because you rendered service. So you debit cash and then you credit the service revenue. Third scenario is that you sell and receive cash and accounts receivable or on account. So there is an increase in cash, so you debit cash, debit accounts receivable, then credit sales revenue. So these are the different scenarios in which there would be an increase in cash. So the correct answer here is letter D, decrease in accounts payable. So because when you decrease accounts payable, it's most likely when you pay pay cash or decrease in cash. Number 12, a debit to accounts receivable would most likely be accompanied by a credit too. So as what I've discussed, you get accounts receivable because you earned because you rendered service or you sell something. So the correct answer is letter C, because you recognize revenue. Number 13, failure to accrue expenses would not result in which of the following? So when you fail to accrue expense, you understate liabilities. So letter D is not the correct answer. So once you understate the liabilities, what happens? So in your net income, you understate the expenses, so you overstate the net income. So letter A is not the correct answer. Once you overstate the net income, you also overstate the equity, since the net income goes into equity. So the correct answer is letter C. So number 14, which of the following accounts cannot be seen in a balance sheet? So what are in the balance sheet? So it's the assets and the liability. So rent payable is a liability. So it's inside the balance sheet. Unearned rent revenue, it's a liability since you have to render uh, or provide the service before you get the revenue. So that's a liability. It's in the balance sheet. C, prepaid rent. So it's when you paid rent in advance. So that's an asset. So the correct answer is letter D, since the rent revenue can be seen in statement of comprehensive income. Number 15. A debit to owner's drawings would effectively, so since you debit, meaning decrease the owner's equity. So the correct answer is letter C. Number 16. An increase in accounts receivable during the period would imply that. So we should neglect the possibility of bad accounts and assume that all sales are made on. So what increases and decreases accounts receivable? So in accounts receivable, what increases this is the revenue. What decreases accounts receivable in is cash collection. So if there is an increase in accounts receivable, it means that your revenue is greater than your uh, cash collections. So correct answer is letter A. Cash collections are less than sales revenue. Sales revenue is greater than the cash collection. Number 17. A businessman decided to use the cash from the bank account of his business to pay for his daughter's debut party. What accounting assumption or principle does this scenario violate? So, from what we have learned, it's the economic entity assumption, which means that a company is a separate economic entity in which it assumes. So the transactions of the owners, the businessman should be different or separate from transactions of the company. Correct answer is letter. So number 18, closing the accounts without accruing some revenues would affect the following, except. So when you don't accrue revenue, income statement would be understated since kulang yung income mo. Let's go to letter B. So, statement of cash flow. So, since hindi ka nag-accrue ng revenue, hindi na-affect yung cash flow since yung cash flow, yung concept niya is that it traces transactions with cash. So, it does not affect statement of cash flows. Letter C, statement of changes in equity. Yes, it affects revenue. Since revenues will go into income statement and the income statement will go into the equity. And lastly, the balance sheet. So if you do not accrue revenues, then you also did not accrue your accounts receivable. So it affects the balance sheet. So the correct answer is letter B. Statement of cash flows is not affected when you don't accrue revenues. Number 19. Adjusting entries are used to A. Transition from cash accounting to accrual accounting. B. Record cash collected at the end of the reporting period. C. Update accounts at the end of the reporting period. And D. Close accounts in preparation for the next reporting period. So, the correct answer here is letter C. Adjusting entries are used to update. So that's why called you adjust. Kasi you update it at the end of the reporting period before closing. Last question for the theory. Which of the following statements is correct as far as the statement of cash flows is concerned? Letter A, the statement of cash flow shows the sources and uses of cash during the period. B, the principal purpose of a statement of cash flows is to measure profitability of a business that uses the cash basis accounting. C, the statement of cash flows summarizes the cash inflows only for a specific period of time. And D, in the long run, it is more important for a business to generate positive cash flows from investing activities than from operating activities. So surely D is not the correct answer since this is not true. Definitely not true. Let's go to letter A. The statement of cash flow shows the sources and uses. So this is true. When you make the statement of financial cash flows, it separates the sources and uses of cash. B. Principal purpose of a statement of cash flow is to measure profitability of a business that uses the cash basis. So this is also not true. Also, letter C is not true, so the correct answer is letter A.